In 2010, one decision was worth billions. That decision cost just $5,000, and almost nobody made it. Most Americans put their money in exactly the wrong place, and they've been quietly losing wealth ever since. Before we get to the winners, let's talk about the villain nobody warns you about: inflation. Since 2010, it has silently consumed 50.8% of every dollar's purchasing power. That means your $5,000 needed to grow to $7,540 just to break even, not to profit, just to survive. Now add taxes on top. The IRS takes a cut of every gain, and depending on what you invested in, that cut can be brutal. These two forces, inflation and taxation, are the invisible hands picking your pocket every single year. So, what actually happened to $5,000 invested in 2010? The safe choice, a savings account, grew to $6,049 after taxes, still $1,491 below the inflation line. You lost real wealth while thinking you were protected. Real estate did better, reaching $8,502, a real gain of just $962. Stable, but surprisingly modest without using a mortgage. Gold surged dramatically, but the IRS classifies it as a collectible, and taxes gains at a punishing 28%. After that hit, your $5,000 became $16,341, a real profit of $8,800. Strong, but heavily penalized. Stocks, the S&P 500 turned $5,000 into $34,750 after a favorable 15% tax rate, a real purchasing power profit of $27,210. The asset least trusted by Americans quietly built the most wealth. And Bitcoin, $5,000 became $3.37 billion. But that was a once-in-history anomaly, unrepeatable, and most who tried to replicate it lost everything. Only 16% of Americans prefer stocks, yet it obliterated every other option. Meanwhile, 37% favor real estate, and 23% trust gold more than the market. Our instincts chase comfort and tangibility, but comfort, after inflation and taxes, is often just a slow bleed. The investments that feel the safest destroy your wealth the slowest. The stock market felt risky, but it was the only engine that truly beat inflation and taxes. The next 15 years won't have Bitcoin at a penny, but the S&P 500 will still be compounding. The question isn't what you missed, it's what you do tomorrow. You can't go back to 2010, but in 2040, someone will make this same video. The only question is whether your $5,000 of today is in that story. Send this to someone who still thinks a savings account is a plan. And while you're thinking about where your money goes next, most people switch to an EV and wonder why they're barely saving anything. There's a reason for that, and a fix. Full breakdown is on the channel.